Hello, everybody. Welcome back to the weekly wrap. Today is Friday, July 5th, and today I'm going to be wrapping up some events in the market this week that I've been tracking and keeping an eye on. You can listen to this show on Spotify, Apple Music, Amazon Music, pretty much anywhere you listen to podcasts. You can also watch along on YouTube if you want to see the slides, some of the charts that I'll be looking at, and you can follow the show on Nostr, and my NPub is listed below. So, the weekly summary of July 5th. Here's what I've been looking at. Number one, the Bitcoin sell-off. Is the Bitcoin bull market over? Is this just a normal correction in a bull market? What should we make of the Mt. Gox selling and the German selling? I'll get into all that and give some of my thoughts. Tesla's pumping. Elon Musk seems to have his mojo back. Tesla beat on their quarterly deliveries, and the stock is up over 40% in the month. Will NVIDIA ever go down? This stock seems to just climb and climb and climb and climb, and there's still so many bullish analysts out there saying that there's so much upside, so I'll take a look at that. And I'm going to take a look at just the S&P 500 chart, give some of my thoughts of where we're at in the cycle, and we're going to have a lot of charts in this episode. So if you want to follow along on YouTube, you can, but you'll be just fine on the audio as well. So let's get into it. So the first thing I want to talk about today is the Bitcoin sell-off. So we did have an all-time high back in March. I believe it was March 13th, and the all-time high was around 73,000 US dollars per Bitcoin. Since then, we'd kind of been chopping around between 60 and 70,000, but recent selling from the Mt. Gox settlement and Germany selling all of their Bitcoin holdings has sent the price lower. We have reached 53,000. That is about as low as we've gotten. If we got below 53,000, then I didn't see it on the charts that I was looking at, but feel free to correct me in the comments. Right now, at the time of recording, we're around $56,000, but it's definitely possible we keep continuing lower. I'm sure there's a lot of people freaking out there, people that don't really understand Bitcoin, the paper hands, the traders. They'll get shaken out of their positions, and if we keep having more selling from Mt. Gox and from Germany, that could send the price lower in the short term, but I think it only adds to the surge we'll see as the supply continues to shrink. Miners are running out of coins. In my opinion, this sell-off is unsustainable because there isn't enough Bitcoin to sell to keep this going down. So obviously in the short term, yeah, we could definitely see lower prices, but it's not really something I'd count on, especially in the long term. Personally, I've been adding to my Bitcoin position. I added today on Friday. I added yesterday on the 4th. So this is something I'm looking at closely. Yeah, I'm not really convinced that this is the end of the bull market, especially since we're just a few months after the halving. I think it's unfortunate timing with Mt. Gox and Germany selling right now to send the price lower. And it is just a reminder, people like me who are very, very bullish on the future of Bitcoin. I see it going much higher than where it is right now. But just because you're in a bull market doesn't mean the price is just going to go in a straight line up. There's always things that happen that you did not foresee that could send the price lower in the short term. And we're still kind of teetering on the verge of recession. Unemployment claims are going up. The Fed might cut interest rates. And typically that's not a good thing as soon as the Fed cuts interest rates. A lot of people don't know that, but usually the markets have a tough time right after the Fed begins to cut because that usually means there's something wrong going on in the economy. So I am also taking a look at the macro picture here, and just because Mt. Gox and Germany selling slows down doesn't mean we'll resume in a straight line up. There could be other things that happen that we don't foresee, such as a recession or something else. We live in unprecedented times. So Yeah, this isn't something I'm panicking over. I'm adding to the position quite confidently. So, yeah, we've had a pretty big sell-off. We're down about 23% from the all-time high, but that is normal in a Bitcoin bull market. I believe in the previous bull market cycle, from 2020 to 2024, that Bitcoin cycle, that bull market, that run up from like 8,000 to 69,000, there were seven sell-offs of more than 25%, seven. So that's pretty normal when you think about a Bitcoin bull market. A 23% price swing honestly isn't that crazy, and the market cap is still over $1 trillion. So this is a very serious asset we're talking about here. We did see Trump this week saying that he was considering creating a strategic Bitcoin reserve for the United States. I can only imagine what would happen to the Bitcoin price if that happened, and how many other countries would probably follow suit. You had a member of the German government, I believe their parliament, criticizing the government for selling their Bitcoin holdings, and basically saying that she believed that they should hold on to it and create a strategic reserve, just like the U.S. is talking about. You have countries like El Salvador who are publicly buying Bitcoin and holding it on their own sovereign balance sheet. I'm sure there are other countries potentially doing this in silence. We already do know that there are countries that are mining. So the overall trend here is that the Bitcoin network is increasing in adoption, and the coin itself is increasing as a store of value. So any price corrections like this, I'm looking to add to the position personally, but that's not financial advice. Do your own research before coming to any investment decision. That's just what I'm doing personally. So, stock of the week, Tesla. A lot of people have been hating on Tesla. I've been seeing a lot of FUD around Elon Musk. A lot of hit pieces on Tesla, a lot of hit pieces on Musk. A lot of people saying BYD is on that ass, which is true, which is true. But this was a stock that was beaten down so bad, and there were so many just negative articles coming out in the media about Elon, about the company, about Cybertruck, about everything, honestly. And to me, that was pointing towards a bottom. I thought that we were getting towards a bottom when we were around 160, $170. I did add to my position quite substantially over the last month, and all of my purchases were made below $200. So, yeah, I'm pretty happy about adding to this position. Again, I'm the type of person that when I'm seeing all of this negative sentiment come out around a company, around a very, very powerful person. We have to remember how powerful Elon Musk is. And he has a lot of enemies out there, even within the United States government, within the United States corporate, I guess, environment. He has a lot of enemies. And so I don't think it's abnormal to see these hit pieces coming out on him and his company, but to me, that points that we're near a bottom in price. That sentiment is nearing a bottom because we have to be honest with ourselves. This is a revolutionary company. He's a revolutionary CEO and businessman, and I'm not going to let the price of the stock go down 75%, and I'm not going to do anything about it. So this was one I added to. It's still a very small piece of my portfolio. Let me see how big it is, actually. Let me pull that up. I do believe it's below 1%, but let's verify that. Yeah, this is still below 1% of my portfolio. For context, most of my portfolio is in index funds or Bitcoin, so the individual stocks play a lesser role. But nonetheless, I did add to the position this week. And I see Tesla, it's not a car company. This is a technology company. They're creating ecosystems that I believe are going to be unbelievably important in the future. And I also think that owning Tesla kind of gives you indirect exposure maybe to some of the things that he's working on that aren't publicly traded. What happens if Tesla has integration with Starlink, or any of these other companies that he's working on? I just think it's a good way to be exposed to that innovation. Some people don't believe in that, but Uh, I think that's a little bit misguided. I think this is one of the companies we have to pay attention to this decade in the coming decades. And for me, it was the stock of the week. So let's move on to NVIDIA. This is one I wanted to talk about this week because, yeah, I mean, the price you can see kind of came down. Honestly, it's not really coming down too much. We're at 127.08 at the time of recording. It's really just kind of consolidating at these highs right now. Now, look, yes, okay. The price of Nvidia is up. What is it? It's up over like 1,000% the last 5 years, something crazy like that, almost 2,000%. You will not see a company maintain this rate of growth. Um, the competitive advantage that they have right now over the rest of the chip market is probably around the peak. If you're making profits like this, if you have profit margins like Nvidia has right now, there's no way that that's gonna sustain itself because you're gonna invite more competition into the market when you're making that level of money. Um, and while at the moment Nvidia is, I mean, this is probably there's a reason it's up, however much it's up. This company has little competition. They have forecasted their product line for the next 3 years. They've projected their earnings, everything. They laid it all out in front of you. That's unprecedented at the rate at which they've done it. And it's in a sector that is growing so rapidly. That's so important to not only the U.S. but everywhere around the globe. It's like an arms race of NVIDIA chips around the world. Um, that's pretty powerful. So I'm not going to sit here and tell you that NVIDIA is in a bubble. It's going to crash 70%. But I'm also not going to sit here and tell you that NVIDIA is a buy at these levels. All I can do really is tell you how I'm looking at this personally. Um, I view this as an unbelievable company. It's a company that I should have bought but didn't buy in the prior years. And it's definitely one that I'm going to have on my list to take a look at in a stock market crash. Let's say if the stock crashed 40-50%, this would be one that I would look at to add to the portfolio. Maybe I would add SMH, which is the semiconductor ETF. But yeah, this is a stock that I can't buy at the current prices. But that doesn't mean it's not a good company. This is an unbelievable company. It's one of the best companies we've ever seen. It's one of the most important companies in human history, if not the most important. Um, and again, that could change quickly, but that's where we're at right now. So is Nvidia in a bubble? Probably not, but I'm also not going to buy it right here. And that's just my own personal take on the situation. So last but not least, I'm taking a look at the stock market chart right here, just the S&P 500. I have a 2-year weekly chart up. We have made an all-time high on the weekly at the time of recording, which is just before the close on Friday, July 5th. We're at 5,564 points, which would be an all-time weekly close. You can see we're pretty much just in a straight uptrend since October of 2022. We had a sell-off in the summertime of 2023, but we've pretty much maintained this upward channel, and it's like Nvidia. Would I buy the market? Would I put all my marbles into the S&P 500 at this price? No, I wouldn't. I think the forward PE is around 21, which is around where it was at the end of 2022, at the beginning of the last bear market. So valuation wise, we're around the same as far as price to earnings goes, but it's not the same market as it was in 2022. And I'll break that down for you right now. So where were we at in 2022? We were at a point of low interest rates, and interest rates were being raised, and we were at a point of high inflation, and inflation was not coming down. So I think with the combination of the stretched valuation, we were also around a 21 forward price to earnings back then. But if you combine that with a interest rate environment that was going from low to high, and an inflationary environment that was very high and very uncertain, that really caused the market to sell off the way it did. It definitely wasn't a sell-off that went too deep. It could have gone deeper fundamentally, but we did recover. People are still trying to beat inflation, and money markets aren't good enough. You're really not even beating your actual inflation rate. You might be beating CPI, but you're not beating the actual inflation rate. If you hold money market funds, if you're just collecting your 4 or 5% interest, because I can promise you your expenses are going up by more than 4 to 5% per year. Um, so a lot of people kept piling their money into the stock market, which led to that recovery that we've had. We're pretty much back up to that same valuation that we were at in 2022, but now we're in a high interest rate environment that could be coming down, which would be good for stocks. Um, but we also have unemployment claims climbing. We're kind of still teetering on the edge of a recession. There's a lot of variables that could go into this right now, and we're also seeing a concentration in the stock market that's never been seen before. So even if interest rates do start to come down, you could still have a recession come. You could have not mass unemployment, I shouldn't say that, but you could have higher unemployment. You could have less consumption, less spending, I should say, from consumers. Um, and that could swing the market around. So, a little known fact is you actually have better forward returns when this market's at an all-time high than when it's not at an all-time high, which might seem counterintuitive because you would think that when the market's really low, your forward return is great, um, which is true over the very, very, very long term. But if you're just looking at like a 1 to 2 year period, your 1 to 2 year returns are actually going to be better if the market's at an all time high than if it's not at an all time high. And the reason for that is because you're probably in an uptrend, which we are right now. So even though we're at the same kind of valuation, which is stretched at a 21 P to E, and that's the same valuation that we had at the beginning of the last bear market, this is not the same market that it was back then. I'm not saying that the stock market's going to go up another 30% from here, but what I am saying is uh, I wouldn't sell everything right now. I wouldn't sell everything. We definitely still could go higher, especially this year, especially going into the election. And I think if you want to kind of predict where a sell off could happen, I think maybe after the election or early next year, you could see maybe some of these recessionary themes kind of play out. You could see interest rates drop, which on the surface would be good for stocks, but there might be things underlying in the economy that would not be positive for stocks. So I'm kind of neutral. I don't love the valuations right here. I'm definitely adding to Bitcoin more aggressively than I am to the stock market, but I am always still adding to stocks and my equity holdings. I'm being a little bit more strategic about what stocks I'm adding to the portfolio. I'm kind of looking for more value than just piling into Apple, Microsoft, Amazon, NVIDIA, Alphabet, Netflix, and I'm trying to find more opportunity because I think a lot of these valuations are on the higher end. So those are just my thoughts. Again, do your own research, do your own due diligence. I'm just kind of here to share my thoughts and ramble. But I'll wrap it up here. I hope you guys enjoyed. If you did, leave a comment. If you didn't, still leave a comment. Let me know what you want to see in the next episode, and I'll talk to you all guys next week.